taking a look at Airbnb shares trading down about 10%, having their worst day since May. That's after posting them better than expected third quarter earnings. However, the disappointing guidance is causing shares to sell off today. And joining me now is Bernie McTernan, Managing Director at Needham and Company. I was taking a look. I was breaking the numbers last night and saw that forward guidance. Should the stock be down more?
I even think this reaction is overdoing it, to be honest. We're still seeing strong demand trends. Nights booked were up 25% in the third quarter. We have that decelerating slightly in the fourth quarter, but still up a healthy 23.5%. And then ADRs, that's the big question. That's the big focus of the bears right now. They're up 12% year over year on a constant currency basis. We have that decelerating to 7% growth in 4Q. And then on the expectation that we're going to be past peak travel in 23, we actually have them declining 4% next year. But that's really the debate here, is that when the macro is going to force Airbnb kind of off the edge of the cliff of this peak travel and ADRs, and then the implication on margins is the key focus for the bears.
And let me ask you about the nights and experiences. That number, especially the forecast, disappointed. How critical is nights and experiences to the Airbnb model right now?
Well, it's the whole flywheel, right? And so the more people that are booking, the more demand that's in the system, that's going to drive ADRs higher. That pricing lever is what flows through the higher margins. And what's really interesting is that it's really a tale of two companies, where before the pandemic, it was things like cross-border travel and urban were the major use cases for Airbnb, and those are growing really strongly. Urban was up 48%, cross-border travel was up 28 or 27% during the quarter. But there's also these new use cases now that are forming, whether it's more rural stays, whether it's long-term stays. Long-term stays are still 20% of the bookings on the platform, so proving that it wasn't just a pandemic phenomenon and people really are changing. And going on that point in terms of travel is changing. If you rewind the clock a week or two ago when United Airlines reported earnings, their CEO was channeling his inner Brian Chesky and talking about how they thought every weekend now is a 3-day weekend, and just the potential for them. So not only are they benefiting from business travel coming back, but how consumer travel is changing. And Airbnb is certainly benefiting from those trends in consumer travel that Brian's been talking about really since the start of the pandemic.
And let me talk to you about Brian now, or you can talk to us, Bernie, because I remember we were interviewing Brian Chesky early on in the pandemic. They made a huge pivot, which was a correct bet at the time. And I was impressed by the speed at which they pivoted. Some people wish the Fed could be as quick about these things, but I'm just wondering, are things changing now? Is there going to be another switch that Airbnb may be able to take hold of and maybe leave its competitors behind a bit?
Yeah, it's a good question. So supply, for example, supply on the platform accelerated this past quarter from mid to high single digit growth in the second quarter up to 15% in the third quarter. Our channel checks show that Vrbo supply actually declined in October. So I think that, part of the reason is like they want you to be listing on Airbnb. They've been trying to innovate a lot on things like air cover, which is a reason why hosts would want to be with Airbnb, but also maybe why guests would want to be Airbnb too. And that's the power of the platform. When we talk about this marketplace with 30% plus EBITDA margins, the reason why they're able to generate such high EBITDA margins is because they don't need to pay for traffic. And still 90% of their traffic is coming to their platform organically. And they're letting that flow through to the bottom line. Free cash flow conversion from revenue over the last 12 months is 41%. They bought back $1 billion of shares. They have over $9 billion of cash. So the investments that they made during the pandemic are really pivots that they made, especially on the cost structure, and that they haven't changed that cost structure, that we're in a peak travel environment, should enable them to weather, a downturn. Obviously, I think bears are playing for that ADR moderation that I spoke about, being minus 4% next year that we have in our models. They probably have more than that, but the company was confident that they should be able to weather any ADR deterioration, at least moderate ADR deterioration from a margin standpoint, and they have the financial flexibility certainly to weather that kind of storm.
Well, we have to leave it there at $9 billion in cash, an enviable position for a number of companies. Thank you, Bernie McTernan of Needham and Company.